We're going to hit up XRP and XLM price talk today, along with a crypto product that I'm extremely excited about. I have to share it with you. If you want hopium, you know where to go, but if you want reality, you found your home. Bitcoin sitting at 26,391, ETH under 18, 1775. XRP still bucking the current trend, 42.4 up 1% last 24. XLM right now though, down a half, sitting at 8.8. We'll swing it on over to XRP, where there's definitely been a downtrend in price. Zooming out a little bit further puts us, it's still a gain from 3 months ago, and we have to keep things into perspective, because if we look at the beginning of the year, we are still up since then. So we do have to keep our expectations fairly realistic. Why? Because there's not that much cash floating around right now. A bunch of people have exited crypto, so there's not as much capital that could pump it up like before. All right, what I want to show you now is a comparison between XRP and Bitcoin. We're going to get to XLM pricing, some really interesting stats. Then we're going to talk about the product that I am super excited to share with everyone. All right, XRP is in red, Bitcoin is in blue. Easy to think about. Bitcoin blue, BB, right there you go. So this is last 5 days. Bitcoin down 3.6, XRP down 4.1, all right? So it looks fairly consistent with each other. Zoom out a month though, and you can see that yes, they still trend with each other. Bitcoin down 12.5, XRP down 16.1. We go to the 3-month time period. You see in 3 months, yes, we're still ahead. See, and that's why you have to look at perspective here. It can't always be moon. It is healthier to step up like this, have some downs and go up like this, and over time build. That is much more consistent. If you think you're gonna be able to sit here and time these peaks and know exactly when to sell, wouldn't suggest that. My personal opinion. But let's get back to it. All right, so that's at the 3 month, but you could still see that Bitcoin making the bigger move than XRP. Remember, Bitcoin in blue, XRP in red. Let's go to the 6 month. That's an interesting time frame. 6 month time frame. Bitcoin up 56% with XRP at 16.3. So I mean, we're talking about almost like a 3x right there in terms of how much more, right, Bitcoin has recovered its price, because we're talking about FTX crash time pretty much since this started here. That's a long time period, all right? And that's a big discrepancy. You could see, so traders recently have flocked to Bitcoin. Now, recently we've seen miners fire up their rigs. Well, guess what? Those Bitcoin miners are now turning them off because they're not making money like they would at 30,000. Interesting how that swings back and forth, all right? But when you swing it on over to the 1 year time frame, you could see that XRP hodlers have been rewarded with 10% growth, while Bitcoin hodlers have been rewarded with, no, they've been lost. Yep, they lost 10% nearly on the last year in hodl mode. So it really is dependent upon when you entered the market and what your story is, what your averages are. Start talking about stable coins, and we're going to get into stellar pricing, and then the thing that I want to share with you. I know, I'm teasing it at the end, but it's really cool. Stable coins up on the screen. We got Tether in green, USDC in blue. Look at the green and blue right here. That is quite amazing to look at. You're seeing that USDT is going up, USDC is going down. You zoom in a little bit closer to that time frame, and you could see it quite clearly from here on. That's when the changes happened, right? When we started losing faith in US banks. Did a video earlier today, I'll have it linked at the end, where I was talking about USDC now, Circle. They're doing stuff totally different. They're even playing it in terms of the debt, right, default. They're going very short term. They actually listed a date for when they're going to carry their debt till, because they want to make sure that they don't go past that, because they don't want to take the risk with any shenanigans with the government. So now let's get on over to Stellar. Total value locked. You could see at the peak of 2022, lots of TVL, 65, 70 million, looks pretty good. Right now we're sitting at 17.61, so a very hefty retraction of overall money on the chain, right? Overall money on the chain. Interesting though, people talk about when moon, right? Look at the time frame of this, okay? So Stellar launched this at Meridian when they did their digital Meridian, all right? And when they launched it, they had like 10 million in there, something like that, okay? So anyways, you could see that from 2021 on up through to early 2022, that there was a huge peak in money put in, which coincides with, oh my gosh, this chart right here. So you could see as money became abundant, as people got stimmy checks, as Jerome Powell and other central banks around the globe said, money printer go burr. And here, I'll make that chart a little bit easier. Here, let's go to this one. This is what I'm talking about right here. That lines up with this time period right here. Money printer go burr. People got stimmy checks. Unemployment benefits here in the States were very juicy. We know the United States was big. We know the US was big at that time of trading. So there was a lot of capital. This is money supply year over year change. All right, so you can see it lines up exactly with that time period. There was a lot of money floating around. And central banks all over the world did this. Now money is retracing. Now money is on the negative side. Since money is on the negative side, there's not as much free capital. Look at the difference from there to there. Actually, let's clean this up super fast, all right? But look at the difference, all right? Look at the delta between there being a negative discrepancy taking money out versus putting in. That's nuts. Percentage-wise, high 30s, 40%, retractions of 10%. That is an insane swing. So when people talk about, hey, mooning, no, and this isn't me being negative, but the money physically is not there to moon. People were people were getting stimmy checks that didn't even need them. And they were just throwing it in. I mean, there were people, you could see it. When people got stimmy checks, they went right into the market. I even did stories out there where they were like, you know what? As soon as I get my next stimulus check, I'm putting 50% of it in crypto. I did several stories like that where that was a popular thing. People don't have that money right now. And people's credit cards, right? Home equity lines of credit, auto loans, home loans, those have all now gotten super expensive while the products are also super expensive. So any extra money people did have starting to get eaten up by interest rates. That's if it wasn't already eaten up by high inflation. Oh. So when we get back to reality and people talk about when moon, well, you're not going to have like big TVLs like this because they've turned the valve off. They've turned the valve off so much that we have a 50% swing in money supply. Money printer went burr like crazy here. And when there was extra money, people were willing to take risks. Zoom out on Stellar. My gosh, the price lines up when money printer go burr time. Now you can see volume is down. Way less people are trading. We can go into Coinbase's financials. We can go in. We can show you, right? It's very easy to do. It's suggestion on a live stream. I think we should do one. Comment down below if you want to see one. But we can go into Coinbase financials and show you that less people are trading now. Way less. There is less volume, less people in, less assets being in, less TVL. Stablecoin market as a whole is just not doing that good. Look, other than USDT, which we get that money printer go burr, right? I mean, come on, anyone can inflate anything. But USDT, money printer go burr, the rest of them are shrinking. Extremely shrinking. BUSD way, way down from what it was. So let's get back to reality. And speaking of reality, let's talk about a product out there that I am super excited about. Franklin Templeton launches private equity blockchain fund. Ooh, interesting. Now, recently, Franklin Templeton partnered up with Stellar, right? This is not that program, though. This is something totally different. That's why you've heard of Franklin Templeton so much recently in the news, because of their partnership with Stellar, where they ran a program on there. But listen to this. Franklin Templeton, one of the world's largest asset managers, has filed for a new blockchain fund that will target institutional investors in crypto assets. The Franklin Templeton Blockchain Fund 2 will operate as a private equity fund opposed to a liquid cryptocurrency hedge fund and require a minimum investment of $100,000. Hold on. Under private placement regulations, Franklin Templeton can only offer the new fund to accredited investors who meet certain income or net worth criteria. The firm cannot advertise or solicit the fund to the general public and must file a notice with the SEC before selling any securities. So how do they get around offering crypto assets to people? Easy. Make it for accredited investors only. Exemption rule 506C. I told you, awesome product. This is a really cool product. Too bad though, it's not for anyone who doesn't have 100,000 accredited investor. So how are they going to keep you out of crypto? Well, there's plenty of ways. They're going to shut down banking rails, which we've seen, especially in the UK. Regulators are taking bites out of crypto using outdated laws that don't even apply to the tech that we're using right now. Even Congress is like, yeah, this makes no sense. This is totally different tech. This does not fit securities laws. This does not fit Howie. But doesn't matter. SEC is still going after crypto. But hey, if you want to get into crypto, institutional, the big bags, the players with the big wallets can get in, and accredited investors. So that's how they're going to keep you out of crypto. Volume is definitely shrinking. TVLs are down. Crypto was big when money printer go burst. So when people keep asking, you know, when moon, when are things going to pick up? And for all the people out there that are like, oh my gosh, we're going to have a big rally in the spring. No. It's when money becomes more plentiful again. Crypto is risky. And because it's risky, it's only when, like, you know, you have extra money, right, aside, that people put it into that risky investments. I'm not talking about small players. I'm talking about people with large funds. It is too expensive right now. Money is way too expensive, and crypto is way too risky. I wish I could report on different things in the news, but that's the truth right now. It sucks. It totally sucks. Trust me. I would love for news to be great because, oh my gosh, I would have a channel that would grow faster, and faster. But reporting reality is exactly just that, reporting reality. And I'm going to keep doing it. Why? Because the fans that I have are awesome, amazing, have been so cool on the live streams. Chat has been lit. You guys writing in the comments time again is awesome. Love it. So that's why I'm going to keep going. So hopefully you stuck to the end. Because the reality is we're going to keep covering the news. We're going to get through stuff. This happens with every industry. .coms did it. Solar has gone through it. Green energy goes through it. Everyone goes. Oil has gone through it. Remember that they were giving oil away for free? So yes, the news sucks for now, but don't worry. Things always turn around. Not that I'm predicting stuff, but that's what happens when you look at the long term. Long-term growth is important. That's why stepping stone is way more realistic and way more attraction than going to the moon. Because how many people are actually going to catch it at the top?